So welcome to the Microbusiness Development Program's Introduction to Business Taxes. You found your way here and you're in the right workshop, hopefully. My name is Rachel. I'm the logistics coordinator for this session. So if you have any technical issues, please let me know. I can try and help you out. I'll also be the one communicating with you after class. Just a few housekeeping rules before we really get into it. As I've mentioned, this will be recorded. We ask that you keep yourself muted when you're not speaking. And we'd also love it if your name is showing in the Zoom window, but it looks like you all have done that. So thanks for being on top of it. If you have questions throughout this session, we'd love to hear them. You're welcome to use the raise hand feature, which I believe should be at the bottom of your screen. And we'll call on you and ask you to unmute yourself if you take that option. You're also welcome to put questions directly into the chat, and either I will read them out or I will call on you to read them out. So whatever you're comfortable with. We'll plan to take a break around 10:45 just so we can grab water, clear our heads, and then regroup. And at the very end of the workshop, you will receive an email from me that will contain a link to this video recording, as well as links to statewide resources and contact information for our business counselors at CVOEO, who are Simeon and John. And with that, I'm going to pass it over to Simeon to introduce himself and the microbusiness program a little bit more.
Good morning, everyone. I'm Simeon Geigel with the CVOEO Micro Business Development Program, and I'd just like to briefly introduce myself and our program so it's clear to you what our program does. Microbusiness was started back in 1988, and there are 5 microbusinesses around the state that works with low to moderate income Vermonters to help them start or expand a business. There's no fee for a service as long as people qualify, which is based on the household's total income versus the number of people in the household. And so we are thrilled to work with people and help them try to move forward with their business. And Rachel will pull up the next slide, and that will explain what the other micro businesses around the state and how you can contact them. So you can see each micro business covers a specific set of counties. Brock covers Bennington, Rutland, Capstone, Washington, Lamoille, East and West Orange. CVOEO, our organization, covers Addison, Chittenden, Franklin, Grand Isle. Northeast Kingdom NECA covers Caledonia, Essex, and Orleans, and SEVCA down in the south covers Wyndham and Windsor. So if you're from those areas, or you might be moving to those areas, or you know someone from those areas who might benefit, please don't hesitate to share the information. And this will also be, as Rachel mentioned, sent out to everybody at the conclusion of today's session. Also like to point out one more thing that folks might want to know about, and that is that we have what's called Embrace Grants now. Embrace Grants are part of President Joe Biden's economic stimulus, and so we are offering $5,000 grants to both startup and existing businesses. To learn more about that, visit the mbdp.org website and click on Embrace Grants, and you will find who the proper contact is for the county that you live in to confirm your eligibility, as well as information in general on the program. So now I'm thrilled to welcome Ross Miller, who is a retired certified public accountant. And I'm so grateful to Ross and his willingness to share his knowledge and skills on this matter. I know it is a topic that a lot of people fear and that there's a lot of unknowns around. And so I think it's very practical information to know, and I'm thrilled that Ross will help us understand more about it. So thank you, Ross. I turn it over to you.
Okay. Welcome to all the people attending, and I'm excited about sharing with you some information, basic tax information for small businesses, and perhaps demystifying some of the questions you might have. Next slide. Oh, but before I get started, I see that we've got a few, we've got half a dozen people.
You're good, Ross. I was just saying it looks like we have 5 people with us now.
Okay, all right. So it looks like we only have about 5 people that are here yet. So for those of you who were on time, I'd like to get a very, very brief understanding of where you are in the process of starting a business or owning a business, and what is the basic product or service that you offer or are planning to offer.
Hi, I can start. My name, can you see me or hear me?
Yep.
Okay, my name is Katie, and I'm an artist. So up until now, I have been selling paintings that are not extremely expensive, and so I've never reported it as any significant income. But I'm moving into selling paintings that are more expensive and also taking commissions, and so because it's more significant income, I know I have to begin treating it like a business. And I guess my biggest questions are like, what are like some consistent practices that I can bring into my weekly routines that won't have me like, oh my God, I have to do my taxes, because I want it to be like, easy. And I know it's the best practice to do quarterly. So I just want to be prepared. That's kind of where I'm at.
All right, that's exactly the kind of information I'm looking for. Thank you, Katie.
Yep.
I'll go ahead. My name is Annalise Shilmandine. My pronouns are they, them. I am a classical vocal performer and voice teacher. However, I am joining this class because I want to start a consignment business for plus size bodies, specifically for opera singers, burlesque, and drag queens. And moving from a services-based business into a product-based business, I have a lot of questions, especially around e-commerce and taxes and what I need to withhold and all of that.
All right, good information. Thank you.
Welcome.
I can go next. I'm Holly. I live in Burlington, and I have been running a small jewelry business for the last 12 years, and I've done some basic taxes stuff, but this year, or in 2021, I ramped it up a lot, and so it became my main source of income. And my biggest questions are like, I've been saving my receipts. I've been doing that kind of stuff, but and I work out of a studio in my apartment, and I want to be able to like claim that, and I don't know where to start with that. So that's why I'm here.
Great, thanks for that information. I'm sure we're going to cover that.
Great, thank you.
I see that, and please correct me if I'm pronouncing your name incorrectly, but Charisse has put in the chat that she, or he, I'm sorry, I don't know your pronouns. You plan to start a copywriting business, and like Katie, you are looking for best practices on quarterly taxes. And yes, your audio was not coming through, Shakina, but if you'd like to type in the chat as well, I'm happy to read out your introduction as well. And my apologies if I'm pronouncing names wrong. I'm a terrible reader.
If your audio is not coming through, be sure that you're unmuted.
Well, it looked like the mute was off, but wasn't coming through. Either way, you're welcome to put it in the chat, and if not, we can move on as well.
All right,
So
then I'm ready to move on from there. Okay, so I'm going to use this PDF as a as kind of an outline of the topics we're going to cover. And the first topic I'm going to cover is the choice of what I call choice of business entity. And that is, a small business can be operated as a sole proprietorship, or it can be a limited liability company, also known as an LLC. And then an LLC can make an election as to how they're going to get taxed. The default is as a sole proprietorship. If it's two people that own the LLC, then the default is a partnership. But then the business could also form a partnership, what they call a C corporation, or an S corporation. And now I would say that if you're just starting a business and you don't file any forms, you don't file anything with the Secretary of State, you just open a lemonade stand and you start selling lemonade, and then the income that you receive from the lemonade stand should be reported on your Form 1040, your individual tax return, on what we call a Schedule C. Many people, many small businesses decide that it's beneficial to be taxed as an LLC, and I believe that Simeon will mention that there's a presentation coming in the near term by an attorney that's going to talk about business taxes, and he could speak more directly about the advantages and disadvantages of an LLC. But essentially, an LLC, it provides a small amount of protection from the individual owner for the debts and obligations of the business. However, it's not a completely extensive protection, because if the business as an LLC borrows money from a bank, most banks will require a personal guarantee. And if you are operating an LLC and you do something that causes a customer to sue you, then you are probably not protected from liability for acts that you occur. So it's of some advantage, but it's not completely bulletproof. And then,
Ross, do you mind if I just jump in for a quick second, mention a
Yeah.
couple of things, since thank you for bringing it up. So as Ross mentioned, we are planning to have a presentation by a lawyer on topics, including this one, in the next couple of months, and we will be sending out information to folks. So please, if you're connected with us, you'll you will get an invitation. If you're not, feel free to connect with our program. But also we will be promoting it through Front Porch Forum and other sources as well. So hopefully you'll see it. And there's no cost to attend, of course. I'll just mention briefly, if you're not aware, when you're choosing a business entity, you would do so through the Vermont Secretary of State. And to Ross's point, if you just operate a lemonade stand and don't do anything, you're automatically assumed to be a sole proprietor until you initiate other specific steps like forming an LLC. So that's it. Just wanted to mention that.
Yeah.
Sorry,
Now,
Ross.
if you decide when you form your own business, if you want to operate under a business name, let's say you want to operate with John's Lemonade Stand, then you can file a form with the Secretary of State so that you can start doing business as John's Lemonade Stand. That has absolutely no effect on your tax status. It just means that you've registered that business name, and it provides some record that you are John, and it to some extent limits other people from adopting the same business name in your trading area. But it again has absolutely no effect on taxes. So getting it's called a DBA, doing business as, doesn't affect your taxes. Now, if you do set up an LLC or any of these other types of business forms, you're going to be required to get what's known as an employer identification number, an EIN, and it's required for all businesses except sole proprietorships. And it is required for any business that has employees. Now, the next point I want to mention is the notion of self-employment taxes. Self-employment taxes is what a small business pays for the employment taxes relating to the owner's income, and it is if you're working as an employee right now, the employer, the owner of the business, withholds from your salary 7.65%. And then when they file their quarterly, when the owner files the business quarterly tax returns, they have to match it with an additional 7.65%. So if you're a single member LLC or a sole proprietorship, or a partner in a partnership, then you're required to report and pay self-employment taxes, which is 15.3% of self-employment income. However, half of that amount is an adjustment, is a reduction of your taxable income that's reported on your Form 1040. And also, if your SE income is less than $400 in 2 of the 3 prior years, then you're exempt from the self-employment tax.
Ross, can you mention what self-employment tax covers for folks?
Yeah, the self-employment taxes is what what you as a business owner and pay in lieu of Social Security and Medicare. So when you're working as an employee, you're paying Social Security and Medicare taxes. But if you're the business owner, then nobody's withholding Social Security and Medicare taxes from you, and the government wants you to pay it through as self-employment taxes. Anybody have any questions about self-employment taxes?
So Ross, I'll jump in. So with self-employment taxes, if somebody is self-employed, they are going to pay 15.3% on their net profit of their
Correct.
business. Correct? Okay. So after they subtract all their business expenses from their business income, what's left over is the net profit, and that's what they're going to pay it on.
That is correct.
And if they have a loss, if they've had a loss in their business?
If the
Do they pay?
business has a loss, then there's no self-employment income, so there's no self-employment tax.
Thank you.
Now, let's talk about the income taxes. There's federal income taxes, and there's Vermont state income taxes. And then if you're operating a business in other states, you may be subject to other state income taxes of other states, but that's beyond the scope of this talk. For the federal income taxes, most of you probably already know that it's graduated rates. The lowest bracket is at 10%, then it goes to 12%, and then 22%, and then it can go higher. But as a micro business, you're probably only looking at those three rates. Before 2018, individuals were eligible for personal exemptions for themselves and their spouse and dependents. Those were eliminated for federal taxes beginning in 2018, but they're still retained for Vermont taxes. And so in addition to the personal exemption, your taxable income is reduced by a standard deduction, which could be $12,400 if you're single, or $24,800 if you're married filing joint. And for Vermont period purposes, it's $6,250 if you're single, and $12,500 if married filing joint. Now, you don't need to remember these forms if you're using tax software. All you've got to do is indicate what your status is, and it will compute. The tax software will compute the standard deduction. Schedule C is the part of your Form 1040 where your net profit from business is calculated, and so your Schedule C income is the net profit after all deductible expenses. And there's an additional deduction that was part of the 2017 Tax Act. It's called the Qualified Business Income Deduction. It's 20% of business net income for sole proprietors and all pass-through income, with limits for high income people. And then when we go to the Vermont state taxes, they
Ross,
start. Go ahead.
Sorry, Ross, can I interrupt you for a moment? I'm sorry. There were a couple of questions that came in, and I'm wondering if you wouldn't mind if we can try to answer them, given that they may relate to the income tax information you just spoke on. Annalise asked, what do you mean when about personal exemptions? So Annalise, if you want to come on and clarify your question, just to make sure I'm getting to the crux of it, please feel free to do so.
Sure. So just in terms of the personal exemptions for self were eliminated, what does that mean in terms of personal exemptions if you are self-employed? Or I don't understand the jargon, so I'm kind of getting lost in all of the jargon.
So under the tax structure before before 2018, you would, in your tax return, you would have all of your income, and then it would, that in calculating your taxable income, it would be reduced by a personal exemption for yourself, your spouse, and all dependents, regardless of the business, whether you were an employee or you owned a business. And then you would get a further deduction, which is known as a standard deduction. And the 2017 tax law change eliminated the personal exemptions, but they increased the standard deduction. So this is true whether you were an employee or you owned a business or not. Does that answer your question?
Yes, thank you.
Okay, great. Thank you, Ross. And finally, Matthew asked, and welcome to the workshop, Matthew. Michael asks, Matthew asks, if your business sells goods, do you pay taxes on those goods in your state, or do you pay sales tax in other states?
All right. That is a good question, and generally, the general rule is if you sell goods in other states, then you have to pay sales taxes in the states in what's known as the destination states. So if you're selling something to somebody in New York State, then you have to pay the New York State sales taxes on that sale. If you're selling into a state that doesn't have sales taxes, then there are no state sales taxes.
Also, I'll just chime in too, at least in Vermont, some things are taxed and some aren't. So I think it will also depend on what it is that you're selling.
That is correct. In Vermont, goods are taxable. Most goods are taxable, but not all. And services are not taxable. But that's not necessarily true in other states.
So I think a very practical thing to do, Matthew, is to check with the Vermont Tax Department about the specifics related to what it is that you're selling, as it at least relates to Vermont. I do recall that there is an internet sales tax, which is probably how a lot of people are selling out of state. So forgive me, I can't remember the term, but if you were to Google internet sales tax, you would get more information on that.
Yeah, I will say that there was a major Supreme Court case that was decided a couple of years ago that dealt with people selling goods on e-commerce, and as a result, most sellers, most companies or platforms that do this e-commerce will charge state income taxes where it's applicable, and then they will then they'll deduct it from the proceeds when what they pay the seller. And I know that's true for eBay and Amazon, and I believe Etsy, all the major platforms now. So they do that for you so that you don't have to do it. But if you're selling across state lines to individuals and you don't have a third party involved in it, then it's your obligation to determine whether or not it's taxable and at what rates. And that could be tricky because if you're selling to somebody in New York State, that may be subject to state sales taxes and also city sales taxes if they have a city sales tax.
Which Vermont has that. It's called the 1%.
Yeah, no, that's a local option tax.
That's a local option tax, right?
That adds 1% for some Vermont municipalities. The standard sales tax rate is 6%, but in some of the towns, the town can elect to add another 1%. So your sales tax rate is 7%.
And those towns are listed out on the Vermont Tax Department's website.
Right.
Hope we answered your question, Matthew.
Okay.
Thank you.
All right. The other taxes are payroll taxes, and this is if your business employs people to work as your employees, then the business is obligated to withhold income taxes and Medicare and Social Security taxes. And then when they file, when the business submits those taxes to the government, then they have to add the employer match, which is essentially why, if there is no employer involved, the self-employment taxes is 15.35%, 15.3% instead of 7.65%. And then the last item I've got listed here under other taxes there's unemployment taxes. Could be federal and state. And then of course, state sales taxes on it's called tangible personal property. So tangible is a good that you can hold. So that would be like if you're making furniture or you're selling clothing or something. If it's tangible, then it may be subject to state sales taxes. And there are some types of tangible personal property that are exempt from sales taxes. For example, most food is exempt from state sales taxes unless it's food that's delivered for somebody to eat, and then it's subject to the meals and rooms tax, which is 9%.
Just a quick note too about payroll. That is one thing that you really don't want to fall behind on and not pay, because there are fees and penalties. And unfortunately, I'm working with somebody now who finds himself in that predicament, and it's something that you should try your best to avoid. Also, Ross, I'm not sure, did you cover Vermont state income taxes? I think I may have jumped in with my questions previously.
I just noted on this slide that you start with the federal adjusted gross income, and then Vermont allows a standard deduction, and I've listed that there, and also personal exemptions. Again, if you're using tax software, then most tax software will take the figures from your federal return and bridge those over to the Vermont return.
Okay. Thank you. There were a couple of questions that came in. Do you mind if we address them now?
Sure.
Okay. Matthew asked, where would I look for information about hiring an apprentice? Are there special rules? There likely are rules around that, Matthew, and I would encourage you to contact the Vermont Department of Labor to review the specifics around that. And in any other hiring classifications you might be considering. Hope that answers your question. Annalise asks, in terms of tangible personal property, are you saying that you'll need to pay taxes on unsold goods in your inventory?
Yeah, that's a great question. The goods are not, you're not obligated to pay sales taxes until the goods are sold. So when you sell the goods to a customer, then if they're subject to sales taxes, then you would collect the sales taxes for the goods that you sold and then remit those in a quarterly sales tax return.
And correct me if I'm wrong, Ross, but on the opposite end of that transaction, when Annalise goes to purchase the items with the intention of reselling that, if she has gotten a Vermont Tax Account through the Vermont Tax Department, she would not pay sales tax when she purchases them, because her intent is to resell them. So
that is
that number.
Yeah. So if you're involved in the sale of tangible goods, then you should get a Vermont Tax Account number, and then when you have that, then you can furnish the wholesaler or the distributor with a resale certificate that says that you're buying those goods to resell them, and so you don't have to pay sales taxes when you buy them, because you'll be collecting sales taxes on the retail side when you sell them. And I'll make one last comment about the payroll taxes. If any of you are going to have any employees or are contemplating hire an employee, I would strongly suggest that you consider a payroll tax service to calculate the amount of taxes to withhold and pay and do the filings for you. They're very competitive, and there's a number of services, and you can find them by just Googling on the internet. It's well worth the additional cost. because it alleviates the concerns and the potential issues of not withholding money from your employees and not paying it over to the state. Historically, small businesses can get into a lot of trouble if they consider that money that they're withholding from their employees as a loan, and then their business falls on hard times and they don't pay it back, and they can be in deep trouble. Not to scare anybody, but that's a problem you don't need to have, because it's very easily corrected, prevented. All right.
Ross, I'm sorry if I didn't hear you say this, but I just to quickly circle back to the employer identification number, and maybe you'll mention this later on, I don't remember, but it kind of relates to the payroll, and that's that a lot of folks may, when they're applying for that, and it's free to get through the IRS, it's good to consider getting that. And most people get that because they want to open a business bank account. But some people, when they're filling it out, they might say, well, maybe someday I'll have employees. So that's a rationale for getting it. But I don't think you should do that. And Ross, you can correct me if I'm wrong, because if you do elect it for that purpose, then you might start to get bills from the IRS stating, where is your payroll tax? And so that's a problem you might otherwise avoid by not selecting that option.
Yeah, I don't have any experience with that one way or the other.
All right. Yeah, I've had some folks that have had that issue.
All right.
Thank you.
And the last thing I'll mention before our break on the next topic is the question of, if you're hiring somebody, are you hiring them as an employee or an independent contractor? And this is it's not a black and white criteria. An individual is classified based on 3 categories of control. Do you control the behavior of the person? Do you control their finances? And what is the relationship? And the consequences is, if they're an employee, then you have to withhold and remit income taxes and Social Security and Medicare taxes, and then match the Social Security and Medicare taxes. On the other hand, if that person is truly an independent contractor, then you have no obligation for withholding. But at the end of the year, you issue them a form. It's called a Form 1099, and you send one to the IRS, and they use that to report the amount of income on their tax return. However, if you've misclassified an employee, you've classified them as an independent contractor, and the IRS determines that they are instead should have been employees, then the business may be liable for the payroll taxes you did not withhold. So again, that could be a danger area if you're not careful. So in most cases, it's not a terribly difficult determination of whether a person is an independent contractor or an employee. But you cannot just assume that I can avoid any kind of payroll reporting and just call anybody that works for me an independent contractor, because if they don't meet the criteria, then you as the business owner could be in jeopardy. All right.
And I'll just also mention with that, if you want to learn more about that, or learn if you're planning to work with somebody and you're not quite sure what the relationship is between employee versus independent contractor, you can go to the IRS website as well as the Vermont Department of Labor. They've kind of have information on that. And of course, you could contact the Vermont Department of Labor to review your situation with them. I think one point to kind of reiterate the potential liability is if somebody you're classifying as an independent contractor is on your site, but really they should be an employee, and they get hurt and they're not covered under your workman's compensation, then that could be trouble for you legally. So I'll just end with that cheery point before break.
Yeah. So let's break for 5 minutes. Is that enough?
That works. So we should try to all be back on at 10:55 according to my clock.
All right. See you in 5.
Thank you.
Okay. The next topic I want to mention is accounting systems. And accounting system is simply the way that the method that you use to accumulate the information needed to prepare your financial statements and your tax return. And it could be electronic, or it could be manual or paper. In the old days, people used spreadsheets, paper with green lines on them and columns on there. Today, most people use some kind of electronic record. It could be as simple as an Excel spreadsheet, or you can use an accounting software package such as QuickBooks. And if you go to QuickBooks, you can either do desktop or online. And there's many other electronic accounting packages. And depending on how complicated your business is, that will determine how extensive, how many bells and whistles you need for your accounting system. But the important point is, whatever you're using it, you should be able to record all of the items that you sell, and all of the money that you pay for expenses that are deductible. Now, the IRS has what they call a method of accounting, where it determines how you determine when you record revenue received and expenses paid. And most small businesses elect the cash method of accounting, which means that a sale is not a sale until you sell the good or service and you receive the cash. And an expense is not a deductible expense until you've actually paid the money. And you might hear the term accrual accounting, but that's not commonly used for very small businesses. Now, let's get into the question of business tax deductions, because everybody wants to know what's deductible. The general rule is a business tax expense must be both ordinary and necessary, considering the type of business, in order to be deductible. And there are some very specific limitations and prohibitions. One element that is not straight cash in, cash out is the concept of depreciation. That is, if you purchase an asset that's used in the business, then instead of deducting the full amount of that purchase in the year that you purchased the asset, you would capitalize it, what's known as capitalize it, and then depreciate it, which basically means you write off the cost of that over the estimated recovery period, which is similar to the useful life, but the recovery period is specified in the tax rules. For example, 5-year recovery period are computers, office equipments, cars, and light trucks. Office furniture is 7-year recovery. However, in many situations, you can elect 100% expensing or bonus depreciation, which means if you bought something, you can deduct 100% of it when in the year that you buy it, rather than depreciate it.
So do you have to choose one or the other, like 100% in the year you buy it, or the 5-year or 7-year depreciation?
The year in which you the year in which you make the purchase will determine if you take 100% depreciation, if you take the 100% expensing the year you buy it, then there's nothing left to deduct. But if you set it up and depreciate it, then you have to stay with that depreciation schedule for the rest of that recovery period.
So it kind of depends on the item and whether you like. So it's just a choice.
Yeah, but there's a number of factors involved, because in some cases you may not want all of the deduction in the year in which you purchased the equipment. You might want to depreciate it so that you'll have depreciation deductions in future years. It just all depends on your tax situation, and your tax accountant should be able to advise you which is preferable.
Thank you.
All right,
Ross, just we've got a question here from Matthew. But before we get to that, I'm wondering if it might be beneficial to explain why depreciation exists and what it means to kind of write it off, and under when it would make sense to choose one of those options over another. if you're comfortable speaking to that.
Yeah, well, the concept of depreciation is if you buy, say, a computer, you might be out of pocket the cash for that computer, but you're going to get use of that computer over a number of years. And the IRS has somewhat arbitrarily put these different kinds of equipment into either 5-year categories or 7-year categories. And it's the idea is associating the deduction with the year in which, the period in which you're getting service from that. And this is not exact, but it's on the other hand, the 100% expensing or bonus depreciation is something that was put into law by a number of different tax acts, and it's done to encourage the capital investment by businesses.
So Ross, is this true that one of the benefits for folks, if they're eligible to use depreciation, is that it will reduce their net profit if they would then pay less tax as a result?
It will reduce your business profit. You will pay less self-employment taxes and less income taxes.
Mm-hmm. Okay. All right. Thank you. Appreciate it. So I'm just going to circle back around to Matthew's question here. So I'll just read it. So Matthew asks, would travel for events and pay for being at those events fall under this group? And if so, how do you do that? Example, a crafts person traveling for an event in another state to meet up with other craft persons and sell goods.
Yeah, now travel is a deductible expense. So by travel, that could mean the cost of buying a train ticket or if you're using your own automobile for travel, then you get the deduction not as travel expenses, but as business use of an automobile, which I'll speak to in a minute. But if there's meals involved in it, up until historically, meals were only 50% deductible, and then they were then the law changed last year to increase that to 100% deductible for 2021 and 2022. But then there's a rule that they can't be lavish or extravagant. So if you're eating a meal while you're away from your home area to attend on business, then those meals are deductible as well. And in the business use of of auto, there's a section in the tax return that asks about, are you using your automobile or truck for business? And you've got two ways to deduct the business use, the expenses for the business use of the auto. One is the actual costs, including the depreciation, which means the depreciation, the car insurance, the gas, the tolls, repairs and maintenance, and so on. Or you can do what's known as a standard mileage, which means you track the business use, the mileage that you use the car or the truck for. And then you get a standard deduction of 56 cents per mile for 2021. I think it goes up to 58.5 cents for 2022. But you would need a log to document the business miles. And the log would for each entry would be the date, the miles that you drove, and the purpose. And that's so that if the IRS questions you and you say you had 17,000 miles, business miles last year, and they'll say, well, where did you go and what'd you do? Then you can pull out the log, or you would have it available, and you could document that what you used it for and what the dates were.
So, quick question here to clarify. Between depreciation and business auto, you say including depreciation under business auto. Does that mean you would elect one of those over the other, so there's no double dipping? So could you
Yes, if you were depreciating the auto, then you'd include the depreciation in the actual costs.
Mhm.
But if you took the 100% expense deduction when you bought the auto, then you couldn't include that.
Okay. And if somebody is using their automobile for personal and business, how does that affect their option to depreciate it? Are you comfortable speaking to that?
You would have to do a proportionate amount, but I do think, now that I'm thinking about it, I think there's limitations on how much of an automobile you can write off as a business, as under expense, 100% expense depreciation. And I don't know offhand what those rules are, but you can't just say, well, I'm going to buy a $40,000 car and I'm going to write it off as a business expense. That ain't going to work.
Right. Okay, thank you.
Meals I mentioned.
Do you know, for the meals, you said that it's 2021 and 2022, they're 100%. Is it determined what it will be going forward after that?
It will, unless Congress changes the law again, it'll revert back to 50% deductible.
Mm-hmm. Okay.
Now let me speak to this, the idea of a home office deduction. A home office deduction, or it could be a studio in your home. It could be your home, either a home that you own or a home that you rent. It's only available if a specific portion of the home is used regularly and exclusively for business. So if you say, well, I use the corner of my kitchen table for business all the time, then that's not a home office. But if you have one room of your apartment that's used only for business, even if that room is as small as a closet, then that could be a home office. But the deduction is based on the actual expenses allocated based on the square footage of the home office. Or you can use a simplified method, which means which will allow you to take the amount of square footage up to a maximum of 300 square foot at $5 per square foot. So that's a maximum under the simplified method and a maximum of $1,500 deduction, which is not huge, but it's better than zero. And it's then you don't have to show how you took all the expenses of your renting or owning the home and you allocated it on the number of square footage. But you still have to have a space that is used regularly and exclusively for business.
So Ross, Annalise and Holly both have their hands raised. Would you mind taking a couple of questions?
No, go ahead.
Annalise, you had raised your hand first. You want to go ahead?
Sure. So my question is twofold. One, first of all, I've been hearing that the IRS with the pandemic, they're getting a bit more specific around what you can consider a home office, especially if you have a job and then you are also a small business owner. And so my question is, how does the IRS keep track? You know, if I work on my computer and I'm in my office that I use, you know, it's just where I sit with my laptop, but all of my inventory is in that room and I'm not using it as a guest room or something else like that. I guess how concerned do I need to be that the IRS is going to come and check out my apartment and ensure that I'm using it for what I'm supposed to?
I think realistically, you don't have to worry about the IRS knocking on your door and inspecting your apartment. You know, if you if you claim that you're using a room exclusively and regularly for your small business, and it doesn't sound like it's extravagant or out of the bounds of reality, I don't think that you need to lose any sleep over it. But I don't know that for a fact. That's just my gut feel. I can't imagine the IRS spending a lot of enforcement time to go after people that are trying to claim another few $100s of deductions on their tax returns.
Annalise, is that clear? Did
Yes.
Ross answer your question? Okay.
Yes,
great.
absolutely. Thank you.
Thank you. Holly, your question.
Hi. So I would just like some reiteration on. So I have an office, or I have a studio that's part of my apartment. And so it would go off of the square footage of the studio in relation to the rest of the apartment and maybe the rent, or is it just the square footage of the space that you use as an office?
Well, it depends on how you're going to deduct the cost. If you're taking the total cost of the rent divided by the percentage of the studio compared to the total apartment, or if you're using the simplified method, then it's $5 per square foot of the studio space.
So it depends on which method you're using,
Right. If
and
you're using the simplified method, then it's obviously much simpler.
but if the non-simplified method might might end up yielding you more of a deduction.
It could very well, but it's also a lot more record keeping and more numbers to put on your tax form.
Okay, so it's kind of like a choice to
Right.
whichever one you want to do. Okay, thank you.
It's very similar to the business use of the car. You know, you could keep extensive records, or you could take the 58 cents a mile.
That's great. Thank you.
Right.
So Ross, just to further clarify, so if somebody wanted to go with the actual expense, they would calculate the square footage of their home or apartment, and then the square footage of the room that they're using exclusively for business, and that would give the percentage, correct?
Right.
Okay. Thank you.
Now, the next item I mentioned is business entertainment. Those costs are not deductible at all, zero, after 2017. And then below that, Rachel, can you advance another little bit? Under retirement plans, I mentioned retirement plans. I know you guys have just started a new business, or you're thinking about starting a business. And I just say, keep in mind, if the business is profitable, or when it becomes profitable, don't forget about the opportunity to have the business contribute to a retirement plan, which if it's a sole proprietorship or a single member LLC, then you would be the only participant in that. It's a way of getting a tax deduction, and you build up some money for a period down the road when you want to retire. And it sounds pretty like, I don't want to think about it now. I got 40 years to do that. I'll just tell you from my own personal experience. My son, is a musician, he and some college mates formed a band back in 1991, and I insisted that they set up SEP IRAs, and every year whenever they had profits, they'd put some of the money into the SEP IRAs, and then over the last 25 years, it's built up to be a nice little cushion, which, as it turns out, has been very, very helpful these last 2 years when they haven't been able to tour anymore. So, I mean, don't forget about retirement plans. They're very simple to do. Most banks and almost all brokerage firms have prototype plans. They can be very, very simple and very cost effective, and all the money going in benefits you, and it's tax deductible. All you have to do is leave it there long enough for a period of time, and so that it can grow.
Thank you for the reminder on that, Ross. And even if you can't imagine retiring because you love what you do, you'll at least have the money to make life a little bit easier for you. Annalisa, before I get to you, I just want to run Matthew's question by Ross here. So this is just doubling back to the business entertainment, Ross. Can you, Matthew asks, what qualifies as business entertainment?
All right, the classical business entertainment is like buying basketball tickets or football tickets and taking a prospective client to a game or to some kind of entertainment. That's entertainment expenses.
And probably if they want more information, more specifics, they can go to the IRS website. Do you think
The IRS website has got a ton of information. Again, a lot of this information, if you wanna just look at what other people are saying, it can be worthwhile to take this tax topic and Google it, as long as you're mindful of if you do that, in many cases, you're going to get a ton of ads at the top of your Google sheet, but you will frequently find either entries by CPA firms that are trying to showcase their knowledge on a topic, or if it's a tax matter, TurboTax has a tax community that will sometimes appear in there if it's a question on how to do something in your tax return. And those could be a little easier to navigate than getting into the IRS website, which is, because it's the official document, it's very, very comprehensive, and you're going to have a lot of references in there to IRS code sections that are not terribly easy to understand. So I would encourage you to use a number of different resources. Just be sure that you trust the resource, and it could give you some good ideas.
Thank you, Ross. And Matthew also asked where we should go to get further information on SEP plans.
If you have an account with a bank or a brokerage firm, ask them. And any of the major banks and almost all brokerage firms will have prototype plans.
Thank you. Annalise,
Or
you have a
even if you don't do business with them, you can go to somebody like Fidelity or T. Rowe Price or Vanguard and just and they will show you what their plans are.
Thank you. Annalise?
So my question, just really quick, when you're talking about the retirement plans, are you saying that the business can contribute to a retirement plan, and you as the employee or the sole proprietor, you don't have to put a portion of your income into the retirement plan?
Yes, absolutely correct.
Okay. All right, thank you.
Yeah, it's a great deal. It's absolutely a great deal. If you learn nothing else from this course, then that'll be worth your 2 hours.
That's amazing. I had no idea. So thank you very much.
Oh,
Thank you, Rob.
and the nice thing about some of these plans, it could be the contribution by the business can be discretionary depending on how the business how you're doing that year. So in good years, you can put in a larger amount, and when you're not doing as well, you're not required to put money in. That's totally different than if you have employees. If you have employees and you set up a retirement plan, then you're obligated to fund it every year. Or you may be obligated depending on how you set it up. But
Thank you, Ross. Ross, I just want to mention to you that it's coming up on 11:30, so just want to give you a little time check.
okay. All right, couple other things. I mentioned a thing about budgeting, and just to identify one budget item could be just a simple spreadsheet with rows and columns for each period, and so that you can track how much money you expect to receive and pay out each period. I mentioned separate business account, a separate bank account for the business is a good idea, because it will enable you to balance your books against the bank. And I've got a blurb in there about hiring an accountant. And at the bottom of that, there is a link to the IRS website that discusses that. But just bear in mind, there's different levels of professional qualifications and costs. You can hire a CPA, an enrolled agent, which are bookkeepers that are also qualified by initial examination and are required to have continuing education. And then there are bookkeepers that don't require any licensing at all, and that's just somebody who says they're a bookkeeper and they open their shop. So you would be well served to go with recommendations from other people. That's the best source of finding somebody. All right.
And I'll just chime in that bookkeepers don't necessarily do your taxes. They'll prepare your books so you can take them to an accountant to do your taxes.
Yeah, some bookkeepers also do taxes. The more qualified bookkeepers are enrolled agents. So there are quite a number of bookkeepers that are enrolled agents. They're very, very capable as tax practitioners. So you don't necessarily need to have a certified public accountant, although I think they're also very good. It's just a matter of finding somebody, regardless of their qualifications, that meet your needs and that you can afford. Let's skip to the very bottom. Tax preparation. There's a number of free tax preparation sources. One is through the VITA program that Rachel mentioned earlier. There's some income limitations. They also are only for simple returns. So no inventory and no employees, no depreciation, no business use of home, no business loss. And then there's IRS free file, and those are available from several software vendors, but each have their own income limitations and other restrictions. And the free versions may not be available for state returns. So all right, I want to briefly jump to the next section. Rachel, if you can pull in the tax forms. This next few minutes is just designed to give you an idea of how your business information fits into the tax form. This is the first page of the individual tax return. 2021 is very similar to last year. You have seen it before, and you will see it again. Just scroll down and stop on, let's see, on line 8, you can see it starts with wages and qualified dividends and pensions, Social Security benefits, capital gains. And on line 8, it references other income from Schedule 1, line 10. So let's go to that. So you'll see that's where you pull in. This is the form Schedule C, and this is the information you need to prepare your business taxes, your business income taxes. You can see that it's got information about you and the accounting method. We indicated it's going to be cash. And income, where you have your gross receipts. And then the expenses, the various kinds of expenses you have.
I'll just mention gross receipts are the total amount of income you've generated from sales to customers.
The money that you collect.
Mm-hmm.
And the various categories of expenses that you have. And then you come down to total expenses.
Tell me if I'm moving too fast, Ross.
Now, for
line 28.
Yeah. So I believe it was Annalise, you have, if you have inventory, then that's a separate, then it's treated different from other expenses, but you can see that in this form.
Ross, Annalise also asked if TurboTax for business is okay.
Absolutely.
Thank you.
I personally used it myself for 20 odd years. And then that section, go up just a second. In part 4, it asks for information on your vehicle. This you complete only if you're claiming car or truck expenses on line 9. And it asks you total miles that you drove, how much of those are business and how much are commuting, and how much are non-business use.
Ross, that comes up in conversations with folks, the difference between business use and commuting. Are you comfortable just briefly talking about that?
Sure. Commuting would be the amount of miles between your home and your place of business. So if you've got a home office, then your commuting is 0. But if you have an apartment in Burlington and you have a studio on Pine Street, then driving from your apartment to Pine Street studio is commuting.
And if they were to be visiting a client, let's say, and they have a home office, would that be commuting from the home office to the client?
No, that's not commuting. That's business if you're visiting a client. Okay. All right. Go to the next the next form. All right, and
Hold on. Schedule 1. Oh, okay. So we were on Schedule C and the next one is Schedule 1.
yeah,
Okay.
so go into Schedule 1 on line, going down a little bit.
That's it.
So the Schedule C flows into this form. And again, if you're using tax software, it happens automatically. You don't have to decide. You don't have to tell it what line to put it on. That's the benefit of using the tax software. And there's a number of products that are out there that are widely used, and if they're widely used, they're probably have been used enough that they've gotten all the bugs out of it, and they're updated every year. Annalise, did you have a question?
Annalise asks, can you deduct the cost of the tax software or service?
Yes. If it is used I would say yes, because you wouldn't be needing it if you didn't have a small business.
And you're saying that because you can get free through the IRS or TurboTax, you can get free filing software, but you have to pay for it in order to claim income on a 1099 or doing any of the Schedule C or Form
Yeah,
C?
I think that's right.
Okay.
All right, then the last thing I want to show you is if you can go to this form. This may be, I hope this is not too busy, but this will just illustrate how the taxes, the different components of taxes work. Rachel, is this a PDF file that you have in the?
Yes. Are you seeing it? It's the.
Yeah, I'm seeing it. All right. So what I've done is I've tried to. This is an illustration for an individual that has a salary from regular employment, and then they've got a what I call a side gig, something else that they're doing on the side. So in this example, let's say they're making $15 an hour. They're earning $30,000 annually from their regular employment, and in addition to that, they're selling something, and they're collecting some good or service, and they're collecting $12,000, and they've got $1,000 of deductible expenses of any of the kinds of things that we said were deductible. So then the net profit from the business net profit is $11,000. Then the next row below that is the self-employment taxes is 15.3% of that. And then when we go to determine your personal income taxes on Form 1040, the Schedule C profit is the 11,000 again, which is the 12,000 less the expenses. And your adjusted gross income from all sources, is the 11,000 plus the 30,000 of salary. And that's where then I show the adjustment to gross income for half of the self-employment taxes. And then the 20% qualified business income deduction, which is 20% of the self-employment income. So now your total taxable income is $49,379. And if you're single with a standard deduction, that's $12,400. And your federal taxable income is $36,000. And this illustrates the brackets. So the first $9,800 is at 10%, then the next $30,000 is at 12%. And then the last amount is at 22%. And the way I get to that 9,254, it's the sum of the 9,800 and the 30,000 and to get to the 36,000. So on the $36,000 of federal taxable income, the total federal income taxes is $66.53. And then when you file your return, if you come up to that number, the $66.53, you subtract what you've already paid in, either through withholding or estimated taxes, and the balance is due on April 15th. And then the next few lines show something similar for Vermont. Here you start with the $41,000, you get the standard deduction, $43.50, and the Vermont tax is 3.35% of the $36,650. Because the Vermont lowest bracket is up to $40,950, but your total Vermont taxable income is less than that. So it's all at 3.35%. So you take your total Vermont tax again and subtract out how much you've had withheld either from your employer or you've withheld or you made estimated tax payments, and you pay that to the state of Vermont on April 15th. So this is somewhat of a busy schedule, but it does show you the relationship between the three kinds of taxes, and it might try and answer the question, how much of what I earn do I have to pay in taxes? Well, the answer is it depends. So I hope that's useful. Rachel, do you think that you can take this form and send it out as an Excel form file?
Yep.
Well, and if you do that, then people can put in their own salary and their own expected collections and deductible expenses and play with it. And you can tell from looking at the cell references how the formulas work.
So there may be questions on this from people. Maybe something wasn't clear. Maybe something needs to be repeated. If that's the case, please let us know. Does anybody have any questions on this? Is something not clear? Do not follow the train of thought.
I do have a question. Do you file your taxes for your two, like, do you need to differentiate your two incomes on your taxes, or just for yourself and then pay the proper amount?
That's a great question. When you file your tax return, you will file a form for the the federal return, you'll file a Forms 1040, and included in that is a Schedule C, which is the business from which will show the income and the expenses from your business. And also included in the Form 1040 is a Schedule SE, which will calculate the self-employment taxes. And that will lead you to a total tax bill. So you only have one tax return to file for the US government, and then one, and for Vermont, there is no self-employment taxes. So you only have one tax return to file for Vermont.
And then would you also, so if I have a job that gives me a W-2, would I also submit that?
If you own the business, if you're the only owner of the business, that'll flow through your Schedule C. So you only have one tax return. It's all on one tax return.
Okay.
Did that answer your question?
Yes.
Good.
I'd just like to encourage and I think reiterate what Ross may have mentioned earlier. It's a good idea and a good habit to get into to pay your estimated quarterly taxes. For one thing, and maybe Ross can speak to this, there is a small fee if you don't. But actually, more importantly, what happens with people if they don't do this, they are kind of hit at the end of the year with a tax bill they were unprepared for and didn't realize would be so much, and that puts them in a really awkward position of having to pay that off and stay on top of that while trying to make present year tax payments as well. So, Ross, are you able to kind of speak to that a little bit more and how people can pay estimated quarterly taxes?
Yeah, I will reiterate that. So it's important to try and, if you've got a business, once it's up and running, using the concepts we've discussed, try and estimate what your business income and expenses are, and if you've always had enough money withheld from your regular salary, then focus on what you've earned from your business, and then make estimated tax payments to both the IRS and the state of Vermont for the taxes on your small business income. And the problem that you get into is if you're underpaid at the end of April, then you're going to owe money on April 15th, which is not good, but you're immediately behind because then you haven't made the first quarterly payment for the next year. So you want to stay on top of it. And you don't need to be precise. You can have a general idea of, you should know, if you're operating a business, you should know how much cash you've collected, and you should know what your direct expenses are. And you should know, at least on a high level, how much of those are deductible. And then you should be able to figure out what your business net profit is. And depending on what your regular salary is, you could just take that business net profit and then multiply it by what I call the marginal tax rate for either the federal or Vermont would be 3.35%. And be sure that you've got that much paid in as you go through the year, so that a year from now, next April, that you're not underpaid. And if you're overpaid, then, and you can afford to, you could just apply the overpayment for the next tax year. You don't get any interest, but you also won't lose any sleep, which is worth something.
Annalise, you have a question?
I do. I have so many questions. Just one for right now, which is what is the benefit of paying quarterly versus setting aside money into a savings account and then paying it all when you file your taxes?
The benefit is that if you, assuming that you can set the money aside, which a lot of people are not able to do, good for you if you can. You want to be sure that you avoid any penalties for underpayment of taxes. Because if you're underpaid, you not only owe money on April 15th, and you face a penalty for underpayment, which is not huge, but it's money that you don't need to spend, and probably more than you'd earn by putting the money in a savings account. So in a very, very low interest environment, the interest that you get out of a savings account is a pittance, but the amount of the interest and penalties for underpayment is noticeable.
Okay, that was my big question, is whether the interest of a savings account would cancel or meet with.
No, nowhere near, like tenfold.
Wow. Okay.
Good question.
Yeah, good question. Do you have another question? You mentioned you had a bunch of.
I have to digest more, so I think there
That's
will
fair.
be an email.
That's
Thank you.
fair. Sure.
These are
Ross,
all very, very good questions.
Ross, can you mention to folks when estimated payments are due and how they can pay them?
Yeah. Estimated tax payments are due quarterly, but they're not on exactly on the calendar quarter. And I think I noted in the PDF that the first one is April 15th, then it's June 15th, then September 15th, and then January 15th. I think I had that in there somewhere.
I do have another question. How
Go
do you
for
pay
it.
your taxes? How do you just like send money to the IRS and make sure that it's actually going to get applied to your business?
Very, very, very easy. So for the IRS, you go to irs.gov and you click on the button that says direct pay, and it asks you what you want to do, and you say, I want to pay my taxes. And you just click on the button that says you want to pay estimated taxes, and when they ask for the period, even though you're making a first quarter or a second quarter payment, you're making the payment for the period that ends at the end of the calendar year. For Vermont, you go to the Vermont tax website, and a similar way to pay. You can pay online, and if you pay with a direct charge to your bank account, then there's no fee attached. If you need to use a credit card, then they're going to charge you 3% transaction fee.
Annalise, I noticed that you had an inquisitive expression on your face. So perhaps you need Ross to clarify something for you.
I did.
Okay.
So when you said that no matter what quarter you're paying for, you want to select the quarter of the end. No, I didn't. I did not retain it.
All right. So when you go to the IRS website, they're going to ask, what period are you paying for? Well, the choice is 2021 year, 2022 year. They're not asking you to identify the quarter that you're paying for.
Okay. Got it. Thank you.
They don't care when you pay the thing, unless when you file your tax return, you show that you haven't paid in enough as of the end of each quarter then they'll calculate the interest and penalties.
Thank you.
Just one other side note too about taxes. People, it kind of relates back to how you decide to price your goods and services as well. So if you're undercharging and not charging enough for things, it'll be difficult to cover all of your expenses, just generally speaking, but also you want to make sure that you are thinking about taxes that you might have to pay in your pricing structure. So making sure you have enough money coming in to do so. We are coming up, it's 11:59, so we're coming up to the end of the class. Does anybody have any other questions for Ross?
I have one final comment, and that is, if you're not, if your business is more complicated than you feel comfortable with doing this on your own, then you should, I would encourage you to go find an accountant or an enrolled agent that you would be comfortable with, that you can develop a relationship with, and then consult with them during the course of the year, so that you don't freak out about taxes and don't lose sleep over it, because it's something it's not rocket science. It's a little bewildering to somebody who's not familiar with it, but you need to devote your time and your energy to running your business, not trying to become a tax expert.
Mm-hmm.
And there's a lot of very, very capable people out there. Just be sure that you get the best way is find somebody who's got a business similar to yours that is comfortable with their account, and ask for a recommendation. And if you have to pick somebody from the internet, then it's okay to interview them to decide whether or not you want to use them. You know, they're selling you something, so you need to be an informed buyer. You want to be sure that they handle other businesses similar to yours. For example, I think, Annalise, you're working on working on a business on a consignment basis. You want to be sure that your accountant handles other businesses that have consignment, because those are a few nuances that are a little different.
And on that same topic, I would suggest, and I've mentioned this to people that I work with, and I went through this process myself. I interviewed 3 different accountants, kind of shopping around, and it was really a practical thing to do, but also an educational thing to do, because with that process, I could confirm what the others had told me. So I could confirm that they knew their information. I learned a lot just by talking to 3 different accountants, but also from a personality standpoint, I learned who I would prefer to work with. You know, so even though they all seem capable in their knowledge, from a personality standpoint, it was very clear to me who I wanted to work with and who I didn't. So, and that's part of the process too, because you have to feel comfortable communicating with the person you're going to be putting a lot of faith in. So, I trust them.
Yeah, if you find a good accountant, you could conceivably have a very, very long-term relationship with that accountant as your business grows.
Can I ask one more question?
Sure.
When you're shopping around with accountants, can you expect that they will offer to do a kind of sit down free of charge? Or should you go into that expecting that you will have to pay an hourly rate just to meet them and discuss what you're looking for?
I don't know what the current practice is. I think That's a good question when you first call them.
Yeah, I can speak a little bit to that. I've seen it work both ways. One person was willing to, provide some time for a free consultation. Other person wasn't, but it's very practical before you enter into doing that to confirm if there is a fee.
Okay.
Yeah, I will tell you that I've contacted a few CPA firms here in the Burlington area when I was trying to get information about what kinds of clients they serve, and many of them will have they will have their own guidelines as to what kinds of clients and what size their client base, and which ones they're willing to accept and which ones they're not. And many times that'll tell you a lot about whether or not it's a good fit.
Great. Well, I know we have run over time a little bit. So I would like to thank Ross so much for speaking today on this topic and sharing his knowledge and his skills on it. Much appreciated. Really hope it was useful and informative for everyone. Rachel is going to be sending out some information to everyone. Rachel, if you want to take a moment to just mention what people will be receiving, that would be great. I want to just encourage people to, if you have questions, you want to connect with our organization. Again, there's no fee for our business counseling services. We would just have to confirm the income eligibility for it. And if I didn't mention it before, most of the work that we do is one-on-one and over Zoom or phone. We're not meeting people in person, but Zoom has been working great. And so don't hesitate to give myself or John a call if you have any questions. And so Rachel's going to take us through what you can expect to receive in the email from her.
Yeah,
So
sure.
thank you.
Thank you, Ross, and thank you, Simeon. That was really informative. So just so you all know, I have put Simeon's contact information in the chat, as well as John Gerkley, who is our other microbusiness counselor at CVOEO. You'll also be receiving an email after this meeting with that contact information, and additionally, a little resource packet, which includes information like this slide that you're currently seeing. There'll be some other links to support throughout the state, just things that you might be interested in for your business. A little bit more on what Simeon was just mentioning in terms of the program that we offer at CVOEO. And sorry, I'm moving quick, but I want to be mindful of your time. There's a little blurb about this grant that Simeon mentioned earlier, Embrace Grants. So they're for startups, they're for people who are in business, and even people who have received this grant in the past. There is a rolling schedule of when you can apply. And finally, if free tax preparation is of interest to you, Ross did mention that it is somewhat limited in terms of what they can do to support business taxes, but the VITA program is available and they are by appointment only. So you need to call to schedule, and those appointments do fill up. So if this is something of interest, make sure you pick up the phone today and call 211 and get on the books. So with that, I will stop the screen share and keep an eye out for an email later today. It will have all of that information as well as a link to this recording so you can review it in the future. And thank you all for spending your morning with us.
Yes, thank you, everyone. And thank you, Rachel. I want to just mention you're such an enormous help with all this, and I couldn't do it without you. So thank you.
You're welcome.
Thanks so much.
Bye, everyone.
Thank you for both the
Bye.
classes you offered this week. It was a lot, but I now have 12 pages of notes and I'm ready to review. And so thank you very much.
You're welcome. And that reminds me, if you'd like to be on our mailing list for future workshops and things that we're offering, just shoot me an email. You all have my address and I'd happily add you to our mailing list. Okay.
Thank you.
Bye.
Bye.
Okay, looks like everyone's gone. Well done, Ross. That was awesome. So
Yeah, you
informative.
did a great job. That was great.
Yeah. Oh,
How do you
I
feel,
guess I
Ross?
should end recording.